Hello, everyone. Sorry, we have had some minor difficulties joining in. I think. Let me stop this music right now. We did have at least try to keep you guys excited still with some music in the background. So we both actually had tech issues this morning, but one after the other. But mine was working, and then Pedro's was failing. But we appreciate everyone that was hanging in there for 2-3 minutes as we put things back together. And here we are. Good morning, everyone. Welcome to Coffee Time with Marie Teresian CPA. If you are a returning viewer or listener, thank you so much for being here. We appreciate your support and being here every time. For those of you who are joining us for the first time, we appreciate you being here. We want to teach you. We are so happy you are here. I want to encourage everyone that's listening or viewing us today to go ahead and subscribe, like the channel that you are watching us or listening to us on. Click the bell if it's on YouTube, so that whenever we go live. Also, make sure you are sharing, downloading, and sharing with your friends, because we want to be able to reach as many entrepreneurs as possible, and especially within this time where after COVID, pretty much, a lot of people started their businesses. So we want to bring this information to them as well. So please invite them to come live, or at least share some of the replays and help them learn some of this information that we're providing. A quick intro. I'm your host, Marie Teresian. I'm a certified public accountant and a chartered global management accountant, an experienced auditor and a CFO. As a CPA advisor and a coach, I use my proprietary and registered methodology, Valuation MT, to help business owners that reach their first million to get to 10x their businesses, get to 10 million and more. I'm also a Grant Cardone licensee, and I'm able to use his materials to teach you and coach you on sales and marketing training as well. So to check out a little bit more on those coaching work that I'm doing, check my other business, the profitlab.biz. You'll get that information there. Also, as an author, I have a couple of books out there, The Complete Guide to Business Growth and Business Owner's Guide to Operational Accounting. I wanted to, before I intro my featured guest, I wanted to remind everyone that I'm having a webinar next week, Tuesday, June 7th at noontime Eastern. So if you can join us, go ahead and go to my website, www.theprofitlab.biz, and click on events, and you'll be able to register for free. I'm going to be talking about what it takes to be an entrepreneur. And with that, I want to introduce, as always, my featured guest, my friend and my tax colleague, Pedro Gonzalez, CPA. Good morning, Pedro.
Good morning. I don't know if you can hear me well. I'm using my phone. It's a good thing that the technology of today, so Thank God that we have it, because for some reason, at the very last minute, we decided the computer, I don't want to connect. So anyway, so good morning, everybody. Pedro Gonzalez, your business and tax strategist. We're here to help you in achieving your financial goals in at least in 3 areas that are critical for every entrepreneur, which is a cash flow. We have said here many times, as a lifeblood of any business, regardless of size and industry. Taxation, as you know, it erodes wealth, and exit strategy. So all of us are going to exit. It depends on how we exit. So, I also have put out there especially in the area of real estate, the ebook on the real estate, specifically for those who are interested in entering into the world of real estate investing. I still believe I'm very pro real estate investing. I think is a great way to build wealth, and I go into that in details in the book. So if you're interested, please reach out, and that information will be made available to you.
Yeah, and I have it right now going in the banner. Make sure to download Pedro's ebook as well, the Real Estate Investors Tax Strategy Guide, and the link is right there typed up. So with that, you didn't mention the e-course, did you, Pedro? You said it comes with an e-course, yes? Your book comes with an e-course, yes?
Yeah, so once you register and download the ebook, it follows with a 7-day e-course, and followed by that by some newsletters, also all geared to the real estate taxation strategies that helps those are interested in the real estate in the real estate world, maximize your profits and so on.
Awesome. So before we start the subject for today, as always, I like to do a quick summary of all the different things that we've talked about. And of course, we're always focusing on the new entrepreneur and those who have been there for maybe 2-3 years. So there's still information out there that, people just throw out. But this is coming right from, very experienced certified public accountant. So I want to make sure you know that we cover a lot of information specifically for you guys. And we've covered so many already. Some of them have been very specific tax related, for self-employed individuals or small business owners. We've done the tax planning series. We've done partnership agreements, buy-sell agreements, financial analysis, how to cut costs. Again, there's a caveat there, but you'll see it when you go back. Year-end closing, employee tax retention credit. We've talked about, specific mortgages, and we had a special guest on that day, mortgages for self-employed. We've talked about entrepreneurial mindset, discipline, goals, personal development. We've talked about 1031 exchange. We've talked about how to use your car for your business. And of course, last week, we specifically talked about IRS audits. And we promised we will today cover financial audits because, most people don't understand the difference. They don't even know why it is needed. And so today's day, we're going to talk about financial audits. And we're going to make that differentiation between the IRS audits and the financial audits. Pedro, what do you think about that? Are you excited about this or what? I was like,
certainly. My background when I started was doing audits of publicly traded companies. So it is an interesting experience, and you do learn a lot from that. So I'm excited.
Yeah, me too. I was like, I probably was like less excited when I was doing an audit, but now I'm more excited about talking about audit.
Yeah.
Because it gets me excited when I'm teaching, others, and then so I think that's what it is. I was like, it was in the back of my mind. I was like, I'm so excited we're going to talk about this. So initially, let's establish the purpose of why a company. A business owner would need or may be required, to have a financial audit.
I'm sorry, I missed that last part.
Yes. So let's establish like why a small business owner or a company may be requested or required or may need to do a financial audit. And by the way, guys, before Pedro answers the question. When you are required to do a financial audit, you are paying the auditors for the financial audit. So
correct.
It's still a cost to you, but the bright side is that you get you're putting out there a confidence to possible shareholders. So with that, I'll let Pedro kind of take over first and give us a little bit of why a business owner would be required to have a financial audit.
Yeah, and I'm going to focus more on the privately held companies.
Sure, yeah. But, since our audience is mostly small business.
Typically it's going to be a requirement, as you mentioned, by a bank because of the certain lending requirements. The other reason could be, and some people get surprised, is vendors. Because, again, remember, in some cases, depending on the volume of work you're doing with them, they're extending credit to you. And so because of that, they, in some cases, depending, again, on the volume of work, the vendors might require you to be audited. And investors, I mean, private equity firms might require you to protect their interests, that your financials be audited. So at least those are three scenarios that come to mind. Why would you be required? In some cases, this is, again, rare, but it does happen sometimes when you have a silent investor, or an investor, kind of an absent investor. You know what I mean? Like you buy into a company and you're not in there in the day-to-day. You want to make sure that your, again, in this case, your investment is protected. So you might require that the financials be audited. So that's usually what.
Yeah, especially like sometimes it might be required because if you have even if it's a, small C Corp or an S Corp, you might have some shareholders that may say, well, we're not there all the time. We're not, managing, we don't know the day-to-day activities. If you have someone, a third party accounting firm come in and do an audit, then we know that the financial statements you're presenting to us are, fairly accurate. And of course, there's another one that comes to mind is, if a company is trying to get a line of credit, which you mentioned, kind of bank, they're trying to raise capital, maybe trying to go public. So they might need to have those type of things, their records audited to make sure everything looks good and legit. Yeah. So, go ahead. You had something to say, Pedro?
No. It's usually going to be either an external influence or internal. Internal, like I said, it's going to be something that internally you're kind of seeing the importance of having this audit. But usually you're going to have is either a bank, an investment group, or a vendor that is requiring this.
Yeah. So, okay, so then let's kind of talk about what is the main purpose of the financial audit, right? So let's focus on that now, because the IRS audit is a very different purpose, and then the financial audit is a very different purpose.
Correct. So the audit, okay, so what exactly, again, I'm going to try to use a simplified terms of this.
Sure.
The way to look at it is, in essence, is to add credibility to the financials that are internally prepared for the purposes of let's assume the bank. I mean, the bank already lent you some monies, and they need us to make sure that the financials, the internally prepared financials, are reliable for them to do whatever analysis they need to do. You know what I mean? So they require us an independent examination. You know what I mean? So that is important, because what they want is a third party that has no financial connection to you. You know what I mean? So they
no financial interest. Right.
Exactly. So you're gonna hear a lot of that about the independence. So it cannot be, for example, your own bookkeeper that did the bookkeeping, somebody that is in the mix of the management and decision making. So it has to be. And the other thing to keep in mind is it has to be done by CPAs. You know what I mean?
Right.
So just keep that in mind that whenever you encounter the situation, you'll be required to do an audit. It has to be done by a CPA. We encourage that the CPA be experienced in your industry, because the nuances of each industry, a real estate versus a software development company, it has different issues that has to be a pharmaceutical and manufacturing. So there's different nuances within all of us are trained in general terms about auditing, but there's going to be certain nuances within each industry that those auditors need to be aware. And if they're already experienced in that industry, it's going to be more efficient and also cost effective for the client.
We are having some, I think, internet delays, but we are back. Yeah, I can see some internet, delays here. Yes, so you're right, absolutely. And, same thing, for example, when you have a nonprofit, a lot of nonprofits are required as well to have an audit because, for example, if you have different types of grants that you are receiving, your grants, your donors will actually require you to submit an audit of financial statements every year, every time you do the application. Even if it's been the same donor every year, they're giving you the same amount of money, it doesn't matter. They want to make sure that you have an independent, CPAs coming in there and doing an audit. So if you have a nonprofit and you're thinking of doing grants or you want to apply to grants, eventually take into consideration that the bigger the grants, the more requirements are going to be that you will need an audit of financial statements. Yeah. Absolutely.
No, that's a good point. And so another factor that can require you to be audited, like you mentioned, nonprofits, either the source of grants might require you to be audited.
Right.
It could be a private foundation, but before they decide to send funds to your organization, they may want to make sure that you have audited financials. So that's a good point.
Yeah, I mean, I spent long years, and I have quite a few clients in nonprofit too. So it's part of what we assist, kind of in the internal management to be ready. And when they bring the outside auditors, then their audit actually rolls around, like very much easier because everything is set. Everything is done already correctly because we are already handling everything, all the financial statements for them. And when the auditors come in, everything is set well.
Yeah.
And so the main purpose of the financial audit is to make sure that, the auditors are saying, well, we've looked at these records, just keeping it in simple terms. We look at these records, the financial records seem to be accurately presented, and the shareholder or the person that is thinking of investing or the bank can actually say, okay, I'm able to rely on this. So with that, I was thinking, Pedro, we can talk about, and I just put a few notes here so we can stay on track with the key ideas that we might want to talk about. And without making it too technical, some of the key things, the key assertions, we call it the assertions, but the key items that we are looking for as auditors when we would go in the records, what are we really testing? What are we looking at? Just so that a business owner can be like, oh, okay, I kind of get the whole point of what this audit is, So if maybe we can go through some of the assertions that we do.
Yeah, and that's a term that you'll hear about assertions. I mean, the assertions are going to be the management's assertions about what the for example, valuation. And it tends to be one about that we kind of look at, and for each one we try is to determine. We perform the test to determine, for example, you look at receivables. So the receivables, one of the issues of receivables is going to be valuation. I mean, is the amount of receivable in your books accuracy as far as making sure that you do have the validity of the receivable, you have invoices that you did issue. But not only that, you might be able to prove that, yes, I issued these invoices, everything matches, but the receivables are 2 years old.
Right.
Now, the question becomes is this actually one collectible, and then do we need to make an adjustment to that to bring it to a value that is more I guess you'll hear this also conservatism. You know what I mean? That is more to what the expectation of what really can we expect to collect. But in general, what we're looking for is completeness as far as in the sense of documentation that supports the transactions, And we have talked in the past about, and I tend to push
exactly.
a lot about record keeping, about bookkeeping, and having good, solid accounting. And if you're reaching that point where you're going to be required to be audited, I implore you, is to hire good, qualified bookkeepers, good accountants, because it makes the audit a lot. It's going to be more efficient, more cost effective. Auditors are not there to do accounting.
Exactly.
They're there is to examine the records and then issue an opinion. So they're not there to perform your accounting. They're not there to support your accounting group. It is your responsibility to do the accounting. That the auditors are there to determine if the accounting is correct, and that's why the independent examination. That's what the bank is saying. We want somebody to come in, look at this information, and determine if, because sometimes what happens is that they might require you quarterly reports. And so those quarterlies are using that, but then we want also an annual audit. So they want us to make sure is everything that we're receiving from this borrower we can rely on.
Right.
And so that's something that I want to emphasize. The importance of accounting, the record keeping, having invoices, having contracts, and so on. So we're looking for that to support those transactions. Inventory should be counted. If you have large amounts of inventory, it should be what we call the counting of the inventory.
Right, the inventory.
What systems you have in place, so we know that when something comes in, how you're accounting for that, and when something, and the movement, the cycle of the inventory, how you're managing that, and how do you account for theft, spoilage, things of that nature. How you're accounting for that, so to get to the accurate number of inventory. So I'm throwing a couple examples, some areas that that we tend to also look at, because those are higher risk for an audit. Cash is cash. We're gonna look at certain movement of cash, but when we look at certain other areas of, that could potentially have some misstatements, that's another thing that we use about, because what we're issuing is not a 100% accuracy, but we're trying to tell the reader is that they're materially correct. Within
in a complete sense, it's
correct.
If there are these minor errors, we're not saying it's 100% to the T.
Correct.
But it's more like if there are those minor errors, they're not material to the overall financial statements.
Correct.
Right. And and then another one, like for example, rights and obligations. Something you mentioned to that is like, if I send an invoice, it is my right because I did sell this inventory. It is my right to collect. There's certain key things we're looking at, and so completeness. You mentioned that, the relevance and accuracy, valuation. We're looking at, for example, in cases of fixed assets, your building, any of those like that you are valuing in the correctly, right? You have a depreciation schedule. Everything is, the depreciation expense is recorded properly. The accumulated depreciation, so the book value is actually correct. All of these things will be like looked at. If you've had any major additions that year, and we've kind of mentioned this, slightly in prior conversations, but to put it in what the auditor will be like, they'll be looking at your details and say, whoa, you just bought a $10,000 equipment. What was it for? What was the purpose? When did you buy it? When did you start using it? Did you depreciate it correctly? And so all of that will be tested. And then, look at all the documents. All the documents will be collected. And so all of this is tested. And that's why we call it, we're going through a testing phase. And that's what it is. We'll be looking for all these documents. If the documents are not there, then that means the auditor is becoming more and more uncomfortable that you don't have all the proper record keeping. And this is where, like, similar to the IRS audit, would be like, more questions will be raised, more red flags going to go up, and then we're gonna end up digging even more, because now we're having less confidence in what you're providing. We're going to start digging in more because we want to make sure we're doing our job properly. And then, of course, the longer we stay, and or the longer the audit, the more it takes time. It's time consuming for both sides. the business owner can be overwhelmed. So please make sure, take this advice, make sure your records are kept well, look at your numbers, and if you're unsure